Good Lord, that's loud. All right, hold on. What's up, guys? Happy Friday. Welcome to the stream. This is Obe TA, where we go live here and take a look at the charts, man. Take a look at Bitcoin, stocks, wheat, corn, commodities, whatever it is you want to take a look at. So, per the title and per the fan favorite, we're going to take a look at Bitcoin first here. Good news to start the day. Jim Cramer says it's time to buy. So, let's get the fucking items. My God, why is that so loud? Hold on. Yeah, dude, Jim Cramer says to buy. So you know, I literally can't get this to go lower. Okay. Anyway, let me know if anybody's in here. First off, thank you for being here. Second off, if the sound is off, if the music is too loud, if the audio or the video cuts out, whatever the case is, let me know, please. I'm trying to do my best here. It's like there's a new issue every time I sign in. So yeah, just let me know if something pops up, and yeah, we'll just go from there. So let's just get into it though. This is interactive, so if you want to go ahead, throw something down in the chat for me to take a look at, just let me know. All right, cool. So moving in, we'll just take a look here. My girlfriend just walked in. Let's take a look at Bitcoin on the daily. So just looking at it here. Should the music start? All right. So yeah, I mean, just taking a look at it here, right? We've been in this channel for the last month, going sideways, going nowhere at this support back from January of 2021. More recently, June 2021, July, right around 30,000. All right, we've just been range bound for the last month. Today, we are down about 3%. And I know that the CPI report came out, and I know that it was above expectations for what they expected it to be. So, unexpected news. The markets do not like unexpected news. We've got a bit of a sell-off going on here, but I mean, really, you know, we've been in a major bear trend. You know, since November 11th, we've struggled to make a higher high and have continuously continued to dump. So, you know, we're just in a downtrend, and it doesn't seem like that's over yet. If anything, this little range that we've got going on here, we're starting to develop a bit of an rising wedge here, which is a bearish pattern. So we got a bit of a bearish pattern showing up with the hidden bearish divergence developing on the daily time frame. So continuation to the downside is implied. All right, and I mean, you can hope, just if we look over here, right, there's no real support right here between 20,000 and where we currently are at 30. So, I mean, if we break down, we could just be going to the bottom of the range again, where we could just continue going sideways for God knows how long, right? We could continue doing stuff like this, but, I mean, the more you break down below this $28,000 mark, I mean, the more likely it is it just breaks and goes down to that $20,000 level, and that's the historical peak from 2017. So, yeah, dude, Bitcoin and crypto in general are definitely not out of the woods. And again, one of the major signs that I'm seeing here that makes me uneasy is you've got this consolidation in a bear trend, but look at the bearish divergence, man. This is just textbook hidden bearish divergence. Momentum going up much higher than previously, yet price going sideways, if not a little bit down. The high that we put in here, right, May 31st, everybody was getting excited about. Yeah, you made a lower high. So it's just not good, man. People are not buying this right now. And yeah, there's a buy wall going on at that $28,000 mark, but it can't get any higher than 32. Really? I mean, we got to get all the way back above like 40,000 to try and take out. I mean, realistically, like this is the high that we can make out up here, all the way at 47. So I mean, since then it's just been a dump. So that's kind of the high, in my opinion, that we need to get back to. But I mean, I'll take something like this. All right, I'll just take some higher lows, for God's sakes. Terrible, man. Just not good. hold on a sec. Let me turn that down. I don't know why it's coming out of the speaker so loud, but whatever. All right, we still good? We're still going. Cool. Yeah, man. So Bitcoin breaking down, retesting the bottom of the range again. Move it to the weekly, which might give us a little bit of help as far as not falling directly to 20,000. But I mean, you can see what I'm saying here. All right, no support looking left. This is the last support. Up till then, it was 3 weeks of just straight up green price activity. So, on the way back down, that's what I mean. That's why it's nice to put it in these sideways consolidation factors, because when you get back above them, they'll act as support oftentimes. But when you get below them, they'll act as resistance. And if there are none, then you likely head down to the next peak, either resistance or support. So what we do have is the 200-week moving average right around 22.6. So the way that I would be sizing this up would be something like this. All right, just in between the 200-week moving average and $20,000 support. This would be the next buy opportunity should we break down here, to at least get some kind of pullback, right? Doesn't mean that this is going to be the bottom before going into a new bull run. But it is just the next level that we can see on the charts. That's really it, man. All right, let's take a look at the 4 hour real quick. Move it to a smaller time frame, see if we're getting any help on this. Not really, man. Back below both moving averages. Negative momentum starting to build again. You're not even oversold on the RSI. All right, lower low in price, lower low on the oscillator, dude. It's just not good, man. It's crap. It's just not good. All right, but yeah, I mean, it's been doing this for the last month. So sure, it could hold again and continue going sideways, man. This is not an area for swing traders, right? If you're longing. It's just not. And if you want to short, you can wait until it breaks and breaches down below and then do something like this, right? Just have your stop loss right above, risking a minimal amount. And honestly, man, the target, yeah, would be somewhere down around here. So, I mean, from the last breakdown, it was down. Yeah, I mean, look, man. Like, you could sit there and be like, no, it's not going to go down another 20%. That'd be insane. It's like, dude, that's literally where the next level of support is, right? Down another 21%, and it just did that back in early May to where we are now. We are 27% off over the course of like 36 days, like a month. So it can absolutely happen again, especially with what's going on in the stock market and everything. Yeah, absolutely. I know Biden came out today and is talking about, inflation being literally everybody's fault but his own, or not the fault of policies made by lawmakers. It's literally Russia and the gas companies and anything else other than him, or the people actually making these decisions that impact our lives, right? That's what a good leader does. They shift the blame to everybody else. So anywho, yes, and on the 4 hour here, I mean, you could argue that you have broken down outside of that big rising wedge pattern. So this could be the breakdown, man. All right. But it's more prudent at this point to go for a short position than a long. I just don't see... There's no bullish divergence or anything. Like, I just don't see a reason to long this right now. This is just a major downtrend. So good luck longing if that's what you want to do. All right, let's take a look at Ethereum. All right, so Ethereum, man. Like, just look at this. Let me move to the daily. Just where's the support, right? 1700. You can see it right here. 1, 2, 3. All right, that's the support, man. That's the July support, and you are literally right now below it. You are 2.5 hours. As of right now, you've got some time to try and buy this thing back above, but as of right now, I mean, that's a solid candle. So, I mean, you break that down, and you've got a pretty massive bullish shark harmonic that's pointing you right around 1400, 1500, which is, you know, where the next lows are. Okay, 1562 on this little one. That's kind of pathetic if you're going to regard that as a support. Small. And then down around 1300, which is the actual discernible swing with a little bit of consolidation. And looking farther left, okay, so that's why, right? Right here, the peak back from 18, the high of about 1400, 1500. All right, that's the support with a breakdown below 1700. And then, man, you break below that, I mean, 846. All right, this peak back here from May of 2018. And then below that, man, I don't know, $357. Yeah, absolutely, it could go there. We go into like a real recession or a bear market or something like that? Yeah, I mean, we could definitely get there. That would suck, but it's a reality we need to be aware of. And if we do get down to that 1500 mark with the harmonic and everything, that's the area to start looking for potential long. That's where you want to start waiting to see it bottom out and start doing something like this, right? Get something like this with some divergence, and then here is where you could look to enter into a position. And it would look like this, right? You would get this, stop loss goes right below the support, and, you know, you target, assuming it breaks the 1700 mark, you know, 2000. That's like a perfect 3-to-1 move right there. So that's how you would do something like this. This is the setup you would do or want to wait for Ethereum now that it's closing below this major support. Again, 2 hours until it does, but dude, not looking good, man. Move it to the weekly. It's just gonna take time, and if you want to be involved with crypto right now, it's like being involved in tech. You know, this is just, it's following the tech sector. It's getting destroyed like tech. So move to something else. I understand if you're underage to trade stocks or whatever, this is all you can do. But look, man, unless you can short, this is just not a market to be, at least for swing trading. This song's too much right now. Hold on. It's too, for swing trading for longs, it's not a bullish market, man. It's bearish. So good luck if you want to be a bull in this kind of crap. I mean, what are we working on? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The 11th weekly red candle in a row. Like, really? Talking about selling pressure and market sentiment, dude. Nobody wants to be buying Ethereum. They haven't wanted to buy Ethereum for the last 11 weeks. They're gonna start buying now. And I mean, just look at the weekly structure, man. Does this look familiar to anybody? Huh? A little bit of a head and shoulders type of pattern, right? This is just not a good looking structure, a good looking pattern. Throw inflation, everything on top of it, man. Who, like, people are having a hard time affording groceries, right? Affording gas. You think they're going to be buying Ethereum? Why? So they can get a piece of a platform that makes, you know, NFTs and stuff like that? I don't think people are buying NFTs, right? You can't eat an NFT, you can't wear an NFT. But eventually I do think it will come back around, right? But we need the stock market and other markets to come back as well, okay? And we need to start seeing it bottom out on, you know, significant time scales. I don't really care what it's doing on the 1 hour. That's not the zone that I trade in, so. But yeah, potentially 1500 could be an area to watch, or is the next area we can expect this to go to. All right, wow. Makes sense. See what I'm saying? Okay, cool. Let me see. Let me actually take a look at the 4 hour again. Right, just lower highs, lower lows, right? A little bit oversold, just barely getting oversold now, but it's like, dude, you're just struggling, man. Projecting the 50 moving average on the 4 hour. You've gone above it a couple times, or it's just right back below, right? It just, every time it gets above it, just dumped, if it can even get above it. So it's just, and you're making your lowest low since May 27th. So a couple weeks we're, you know, making fresh new lows below critical supports. Okay, we're probably heading to 15. That's it. I don't really have anything else to say about it. All right, let's move it to the total market cap down about 3.78% as of right now. Again, 2 hours to close. It is still above some of its critical supports, like its July lows from 2021. It's there, it's at it. But given, you know, what Bitcoin's doing and what Ethereum looks like and everything, you know, I'm not so confident that this will hold either. I will say this, personally, I've shifted everything into Bitcoin. You know, looking at like the Ethereum to Bitcoin chart and stuff like that, altcoins just look ready to underperform. Everything looks ready to sell off more, but Bitcoin looks poised just by like, let me show you what I'm talking about. Let me show you the Bitcoin dominance chart here. All right, so this going on when you see these kind of patterns, all right, almost like the inverse head and shoulders stuff going on, right? Shoulder, head, double bottoming, you know, moving up towards highs, putting in higher lows. What this implies oftentimes is that, especially in a market selling off or dumping, that Bitcoin will just dump less, right? So if Ethereum is down 20% on the day, Bitcoin will be down like 10. So I don't want to be out of the market completely because you just don't know what's going to happen for sure, but I do want to mitigate my risk as much as possible. And, you know, I've been in this game for a little over 5 years. I've seen the Bitcoin market, I've seen the alt market. For altcoins to start coming back, Bitcoin has to move first. It just does. The alts lag behind. Once Bitcoin starts making those fresh lows and people are confident again, the altcoins will start ripping, and hopefully the Shiba Inu trash and ape coin stuff just dies and real things can start to come in and make this less of a joke market. Because as of now, you know, back in 2017, I saw a lot of dumb crap, Jesus coin, stuff like that. And you kind of like to think that as time goes on, it's always progressing, that the space is going to just get better over time. I gotta say, man, the last run that we had up through 2021 and all of the NFT crap that came out and Doge and Shiba, dude, I'm not so confident, honestly, that we're progressing. That seems like a regression as far as the crypto market is concerned. The adoption, everything, awesome. All of that stuff is great, and I still am long-term bullish on it. But dude, I mean, the amount of NFT scams and all that crap, man, it's just, there's a long way to go before crypto starts really kind of, from a project standpoint, changing lives. I know that Bitcoin has changed a lot of people that are fighting their country's inflation and stuff like that, but yeah, man, we got to get that crap out of here. Especially if you want like institutional investors to start coming in. You think they're coming into a market that's full of, you know, WTF Goblin and Bored Apes and stuff like that. Shiba Inu being the number 16 coin, it's like, come on, dude, it's a joke. All right, so yeah, dominance looking to outperform. We can look at the Ethereum to Bitcoin chart. Okay, like this looks disgusting. Once again, it's kind of like the inverse of what we just looked at. This is Ethereum's performance to Bitcoin, right? Does this look good to you? Broke the neckline. I mean, if anything, if we want to try and take a measured move here. All right, take it to the top of the head. Much more down. My goodness, man. I mean, down to, yeah, down to the low. I mean, we do have a support back here from April of 2018 at 0.05 Bitcoin. But, good God, man, you break that. Yeah, you could be heading down to 0.02, right? It's just a lot of downside implied with structures like this. All right, it's just not good looking. It looks like a top. It looks like distribution going on. It just looks disgusting. So this would imply Ethereum underperforming Bitcoin. Thus, you know, I have shifted my proposal. Once this chart turns around and starts putting in the bottom and starts putting in bullish signals, then I will reallocate back into Ethereum to try and catch, you know, over performance, right? But for the time being, man, I'm not very confident in Ethereum. All right, if you any of this is helpful or anything, if anybody's in here, man, I appreciate it. Do me a favor, hit the like button, the subscription button if you haven't yet. Really helps get some eyes on the channel. If you have anything you want me to take a look at, I know I talk a lot of shit about ApeCoin and Shiba, but man, if you want me to look at the chart or whatever, I don't care. I'll look at anything. All right. But yeah, Solana, it's like you're trying to hold a support from May 13th, 2022. You have been absolutely decimated ever since April 3rd. It's just been basically straight down. I mean, what are you holding on to? This little bump right here, this top, July 7th, is that supposed to be the support? Move to the 4 hour, we can see we are in a descending triangle. You could call it a bear pennant, bear flag, whatever you want to call it. In a bear trend like this, consolidation, arching down, right? It's a bearish pattern. So, I mean, the closer it gets to the apex, the more likely it is to make a move. And you're in a bearish pattern like this. Bearish patterns often, or I'm sorry, a bearish trend. In a bearish trend, bearish patterns have a higher likelihood of performing, right? If the market was like this, and then it came down and then formed, a descending triangle or something, the likelihood that it dumps or overperforms are less. It's more likely that it fails, right? Because the patterns can fail as well. But we are in a major downtrend, and now we're showing a bearish structure. Yeah, you're probably breaking down to the next major support. Certainly not at one now, but if you break out and fall below this, where are we at? $37. You're probably heading to 22. All right, which is a further drawdown of what? 40%. That's what I mean. Once you start getting down into these numbers, it's like 37 to 22. That's not a big deal. It's only $15. The numbers are smaller, therefore the percentage is higher. You would be down 43%. If you put in $1,000 now, thinking that you're at the bottom and trying to, buy the dip or buy the double bottom, whatever you want to call it, you're risking a further 43% downside if this pattern were to fail. Again, you'd be banking on a bearish pattern failing in a bear trend. That just is not a smart bet to me. You would be, it would be much more prudent, right, to short and just put the stop loss like right above the 50-day moving average that it's been struggling hard to get above. All right. Then if you're targeting here, it's 2-to-1 odds. It's not the 3-to-1, but you can make it a little bit tighter even if you want. 2.73, all right, whatever you want to do. But this makes more sense and seems more likely because, I mean, dude, like, just flip it over. Right? Like, look how bullish this looks. Now you have a bull flag going on, right? It looks like it's ready to break out. Like, do you want to be shorting this asset here? Why would you short this? You see what I'm saying? So I get it, man. It's like, everybody wants to be optimistic, especially after you've put money into something, but you have to be realistic about what's going on. Okay? Bearish pattern in a major bearish trend. Why would it be more likely to fail and go to the upside? It just wouldn't. And even if it does, you're going to run into a wall at $50. All right, you've got first you got to get above the 50 moving average. Then you'd have to get above the 200 moving average, which, I mean, at that point's what? Upside of, I mean, the 50, you're right on it. But even if you got just to the 200, I mean, 25%, risking 40% downside, it's the opposite of what you should be looking at. All right. So yeah, I think honestly in time with what's going on, you'll see $22 Solana. All right, and it's getting close to that apex of the structure. So I think we see it. What's it, Friday? Yeah, dude, we might have another awful Monday coming up, right? We'll see. Let's take a look at the weekly. And did we already look at the weekly? Like, look how look at this, man. This is the Ethereum killer. So I mean, when you get out of like the 10-minute, 15-minute charts, 30-minute charts or whatever, because let's be realistic, like those charts are for literal day traders. And most people are not day trading. They're not looking at, you have jobs and stuff like that that you're doing. You're not sitting at your computer watching it 24/7. So you're not watching. As a day trader, you need to watch it, right? You're making changes throughout the day. If you're buying it and you're like, in a couple days I'll watch it on a 30-minute time frame, that's where you're getting your signals to buy for like days at a time. You're gonna have a rough time, man. All right. But it's like looking at this on the weekly, you're below any kind of support. The support really was up here at $50. Psychological, it was like Swiss cheese. You went right through, dude. Terrible. All right, so yeah, Solana, man. The only place that makes sense for me is, and there's not even any bullish divergence on the RSI or anything. All right, so maybe after 10 red candles, you get, next week you get a green candle, maybe. But it probably would just end up coming up to 50 before rolling over and heading down to 22. At which point, that is major support. And then we start to look for something like this. And then we look to get in, like I said, here. Or we get an inverse head and shoulders or something, bottoming out. It's nowhere near that right now. This could literally take months for this to... If this pattern were to happen, it could take months for this to happen. So in the meantime, this is a shorter's market. This is a bear's market. All right? You don't look to be longing crap like this. Okay? Because also, if you can get involved with stocks and commodities, stuff like that, dude, energy companies, commodities, even like weapons manufacturers, stuff like that, they're actually, in bull trends. So go trade their bullish signals, right? You don't have to trade this. You just don't. Is that the famous saying, right? There's a time to make money, but there's also a time to not lose it. Sometimes you just got to chill. And if TA has kind of taught me anything here or shown me anything, it's just the times to chill, right? There is no edge here. There's no statistical advantage here. That's it. So, again, I always say, if you want to gamble, go have fun with it, man. Get a nice little tux, get a nice little suit, go to the casino. Throw it on red, get free drinks, right, with your buddies. Have a good time. Don't do it in your underwear, in your basement or, in your loft, wherever you are. With a stain on your shirt, right? Getting just wrecked by yourself. Like, where's the fun in that? It's just embarrassing. Don't do it. Okay? Don't do it. Hold on. Let's take a look at, I think Cardano's up next. Let's take a look at Cardano. Another fan favorite, down 7.62% on the daily, rejecting the 50-day moving average. Hidden bearish divergence on both oscillators. Actually, yeah, I mean, let me get a grip here. Bit of a broadening pattern going on, and it broke out of it and then it's rejecting the 50. So, I mean, it's going to come down back to the trend line at about 50 cents, most likely. That makes sense. Psychological number, as well as the apex point of the falling wedge that it broke out of back in March. Oftentimes, we'll talk about how those can be points of support. But looking left, man, I mean, there's nothing looking left. Okay? Like, where are you looking left? You're in the middle of this just straight up craziness. There's literally nothing here. It's like, sure, it bottomed out a little bit at 45 cents. Really, it came all the way down and did, in fact, touch that peak support back from April of 2018 at like 40 cents before trying to make some moves. But you certainly haven't taken out this high from May 5th. All right, and that is your last point of positive momentum on the MACD up here. So, I mean, yeah, you're not anywhere near it. You're selling off, again, rejecting the 50-day moving average. Maybe you come down, like, let's say you hold this, right? Then, okay, then we're looking at some potential interesting stuff. But I think more downside at least to 50 cents incoming. Great. Honestly, in my opinion, likely that you're heading back down to 40 cents. Heading back down to that peak, probably. Okay, and this thing's been a loser literally since September 3rd of 2021. So remember when Bitcoin and all those guys kept going up? They went up all the way into like December, January, and for whatever reason, Cardano decoupled in the wrong way and just started going sideways, and everything else was going up. Yeah, okay, Charles, shit together, and I don't know, maybe get immunized or something. Do something to help out. Okay, I think this was another Ethereum killer, right? But sure, you know, again, it needs Bitcoin to come back, and at 40 cents, maybe it's a steal, dude. I don't know. But I do know what I'm looking for, and honestly, again, I don't know if I would want to short it here, just because you do have some support looking below. You do. So look, you have Class A bullish divergence on the weekly time frame. You don't have it on the RSI. So I think literally best case scenario, you actually have some green candles on the week too. Something a little bit different with Ethereum, but I think best case scenario, again, is pending that Bitcoin doesn't roll over. Best case scenario, Cardano's heads to like 80 cents. Probably not even, probably the 382. I don't know why it's 67. It's not even a weekly support. Best case scenario, 75 cents. Which would be a decent gain, but again, man, it's like the candle you're getting now, the upper wicks kind of stuff, it likely doesn't get there. All right, likely just rolls over again. If it were in like a good uptrend, then I could say, yeah, without the divergence on the RSI, 50% retrace before doing something like this, right? And then getting some hidden bullish divergence or something maybe before continuing up. But that's just, it's not the case right now. All right, we're still live. Sound's still good, I think. Cool, it's been about 35 minutes. All right, if anybody's in here again, say what's up, say hello. Much better with some interaction. Let's take a look at the S&P. Oh my goodness, dude. That's, ew. Like, look at this weekly candle. Down 5%. Treating support. Notice how it was support in February. Notice how it was support back here in May of 2021. Look at how it's rejecting it as resistance now. That looks awful. Head and shoulders type structure below the 50-day moving average. Again, treating support as resistance. It's just like, dude, I don't know what else to say, man. It doesn't look good. No Class A bullish divergence on the MACD or on the RSI. If we take it from the COVID low, that's the last real discernible low. You're only at a 382 retrace, dude. I don't see how the S&P 500 doesn't come down to the 200-week moving average at the 50% retrace at a slight support. Acted as resistance back here in September of 2020, but you could call that support going down. 3,500. All right. Which is a further drop of about 10%, and you're already off the top. Remember, 20% is bear market. You're already off 19. So you'd be down about 29%. That is officially a bear market. Etc. Understand? Officially. You're pretty much there, right? 19%? Okay. Maybe this is why Jim Cramer is so bullish, because it's only 19%. It's not necessarily 20 yet. Right. We'll fly later, Jim. Fly. Yeah. All right, so, dude, I think it's likely that we do a 50% retrace, which is just kind of normal. It's kind of common. All right, again, this is a weekly time frame. This is serious. So, yeah, I think 3,500 is the next stop. Move it to the daily. No hidden bearish divergence, but again, you know, like we talked about on the weekly, rejecting prior support. Didn't even touch the 50-day moving average, gapping down. Just crap, man. They're coming out. Inflation's higher than expected. They say that every single time they talk. Well, it's a little bit higher than we expected, but it's well within our numbers. And honestly, the economy is stronger than it's ever been since we've gotten office. Just ask this guy that I'm gonna bring out here. Yeah, it's higher. It's great. Talk to literally anybody, and they'll tell you no. they're pissed about gas and groceries and stuff, right? Where are the people in real life saying they're saving money and doing great besides, you know, millionaires, billionaires? They ain't there. Right, but yeah, we're just at a shallow retrace right now. Red 2. Okay, so more pain likely ahead. 3,500 incoming on the S&P 500. So let's move to a gold. All right, I was kind of expecting it maybe to get a little bit lower and retest the 1,800 level, but it had some other stuff in mind. It is getting up to test the 1,900, really, this peak here from November of 2021, reacting off of the really nice, honestly, bullish bat harmonic. Actually looks pretty good. Where am I? Harmonic? Oh, there it is. So actually looks pretty good as far as that reaction goes. Now, again, all right, this is just the reaction low, so it could come down for that type 2, but looking kind of strong. If it get break back above this peak, I mean, that's good news, man. You get back above this peak, break it, and then hold it, that's when you can start looking real bullish on gold again. Yeah, that's pretty much it, though. You're coming up to test resistance at 1,800. That's the level you want to break. You break that, you go to 1,900. All right, this peak back here from June 1st. Break that, you likely go to the C point at about 2,000, and on and on we go. It's not going to just be straight up like that, right? But maybe it pulls, but maybe it does pull back here before then going, okay? Maybe that's when the S&P starts really kind of up right around here. In July, maybe August, early August, the S&P really starts dumping, and then gold actually starts kicking in and acting as a hedge, maybe. We'll see. Not bad, though. Better than altcoins, for sure. Let's take a look at Tesla just for fun. I had a short setup on here. It's doing pretty well, right? Likely heading the target, just the low that I had back in May 24th. Just targeting a low. Position was taken at historical resistance at about 780. Just seemed like a good spot. I do believe as well from this high to low. Yeah, it was like a 50% retrace. So it's a 50% retrace lining up with historical resistance, right? In a downtrend, tech. Tesla's not necessarily a tech company, but it's definitely been affected by all the supply chain woes and inflation, all that stuff. So yeah, playing out. I guess that position is what? Roughly about 10%. So got another 10% to go. Let's get it, man. Come on, man.
Come on, man. Give me a little break here.
Money.
Mr. Crabbing it up in here. Big claw on it. Big claw energy. Let's take a look at the cues. This is the tech sector again on the day, gapping down violently. It's like, yeah, I mean, sure, you can point to CPI and all that stuff, whatever, but I mean, just that's what I mean. The chart kind of doesn't lie, right? It's been implying downside. So these guys can come out and say whatever the hell they want, but the chart lets you know the sentiment of the market. And it's lower highs, lower lows. The Qs, the tech sector is actually down about 30%. So this thing's been in a bear trend ever since April. I guess it got back above. So really, like, yeah, early May, this has been an official bear trend on the tech sector, down about 30%. So that likely heading down to, again, like, where are the supports? We can move it to the weekly. It's fun on the way up, man. It's cool when they're printing money and rates are super low, so you can buy, you know, expensive houses, and they're throwing money at you and stimulus and shit like that. Not so much as far as shutting down people's business stuff, but, you know, they're just printing money like it's going out of style, and rates are cheap, and it's just cheap money, right? It's so much fun. But then the party is over, or the party starts ending, and then you have the not so fun stuff if you're holding if you have like a 401k or something, right? This likely heading to 266, the 200-week moving average, which I think kind of pulls the S&P with it. That's why I think the S&P is going to the 200. It's kind of just lagging behind this a little bit, but I think it gets there. Similar structures, right? They both had the head and shoulders. It's a little small. That looks like a... God, why would I do that? Hold on.
Hold on.
Yep.
What the hell is even that?
Disgusting.
Okay,
Dude, why is it so loud? Alright. Yeah, 266. Probably next week. You just closed below a pretty serious support at 297, 300. So I think it's heading to 262. And we'll see from there. Right? You break that and the 200 moving average, you head down to this little peak right before the COVID crash around 236, which is a further 18%, at which point it's like people are really going to be feeling that. That's going to be painful. All right, let's see, man. Let's take a look at a commodity. Let's take a look at wheat. This is a wheat fund, and you can see the kind of scooping behavior that's going on with this one. This is not the direct wheat futures chart. This is actually a ticker that you can invest in to get exposure to wheat. As far as the weekly is concerned, it did close a bullish harami. This little candle called a harami in Japanese means like baby or something, or pregnant. I forget which. But called the harami because it's in the little belly of the big red candle, right? But it's a bullish pattern, so I think at least come up, fill the gap around $12. No bearish divergence on the MACD. Some on the RSI, which I'm not a huge fan of. But like, you got to consider with wheat, it had this week where it was up 33%. I mean, this thing could come all the way back down and come to the curve before then continuing, right? It wouldn't be that surprising. So long term, everything going on, food shortages, all that stuff impending, and with the way that this chart is bottoming out, yeah, sure, man. It could pull all the way back to the 50 moving average, down around 8 before continuing on. It's a bit of a longer term play, unless they start getting stuff figured out, and so far they have not. All right. What else? Natural gas. Taking a look at natural gas, right? A pretty nice looking cup with handle structure that was going on back in late 2020. Cup with handle broke out, measured move, putting it up around 35. And if you go ahead, throw a Fibonacci from the high to low there, put you up around the 886. If you have maybe you have a harmonic down here somewhere. Yep, there's your bearish bat. Pretty good one. All right, so you got the bearish bat hanging out right up around the 886, right around what, $36. But again, right, even with this is bottoming out and stuff. If this is the start of the bull trend and this does get up here, it could just pull back to a support before continuing on, right? Doesn't mean it's the death of natural gas. It's just you're getting close and approaching what should act as resistance. So is it the time to buy it? No, it's not. If anything, the break of the cup with handle would have been your signal back here in April. At which point you're up about 32%. Cool. But you're approaching the resistance now. So maybe we'll get some relief in natural gas prices. All right. I think that's going to do it, guys. Right. There's no interaction. Pretty slow going. I don't really have too much else to talk about. Let me just move it back to Bitcoin here real quick. If there's anything going on, you're still below 30,000 at what, 29.2? 29.26. attempting, still about 2 hours. I mean, they're attempting to get back inside this wedge. You're still inside the channel, which is okay. Again, you could just be range bound forever. You never know, but just levels to look out for, all right? You don't want to break 28.7. If you close below your lowest low back here at 28.5, there's literally nothing looking left, man. There's nothing. You're just straight up at that point. So, I mean, yeah, it's very possible your head's around 22 and you might get there faster than anything. I mean, just look, right? After this major pump on May 4th, everyone was feeling the force. May the force be with you. And everyone was like, all right, I'll go buy Bitcoin. Some kind of Jedi mind trick on people before the Sith came in and dumped it. And it literally lost 27% in 5 days. Okay, so imagine that happening now. It would be 23% in 5 days, 6 days, 7 days, wherever it happens, man, especially after consolidation like this. I'm just saying. So be wary. All right, that's gonna do it. Anybody that's in here, anybody that's watching later, I appreciate it. Do me a favor, as always, hit the like button, the bell, the sub. I should have plugged this in here earlier, but I'm gonna go ahead, throw the Discord in here. Do me a favor, jump in there all the time. If you got any questions, you can ask. There's educational resources. I put in, trade setup, stuff like that. It's a good time, man. All right.
Okay.
I appreciate it. So yeah, guys, have a good Friday. Have a good weekend. I'll probably be back like Monday. But that's gonna do it. Until then, keep it real, keep it fresh, keep it chill, keep it slightly risky. Take risks in life, but more important than that, more important than anything, as always, keep it technical. Applause.